Hi dear audience, my name is Alexey. In this video we will talk about the second property of support and resistance levels, which sounds in the following way. The market is more likely to rebound from the horizontal level than it will break it through. We will discuss why this happens. We will also analyze the true reasons of the main market participants while trading near the levels, and we will take the examples. When the price comes to the important support or resistance level, a correction or the market reversal can start, or a temporary movement slowdown can take place. This property of the levels is especially important when analyzing large time frames. If the market enters such resistance or support zone, a sideways trend can form on smaller time frames. The properties of levels work for the simple reason that most traders believe that they have to work. Thus, the demand and supply balance will change around this level that can cause a change in the price movement direction. There are always several groups of traders on the market that tend to act around the levels in a particular way. Let's take as an example of the euro to Australian dollar currency pair. What can occur on the market when the price comes to one of the important levels? Flats can be formed around such levels or triangles on the current and especially smaller time frames. Since October, a bad trend was evolving in the market. Price lows and support levels were successively being broken through, and the market was declining rapidly for several weeks. However, afterward, the price, having formed the next support level, returned to it for several times, but couldn't overcome it. As I mentioned in the previous videos, the support levels are plotted from the borders of the bodies to the borders of the candle shadows. The first horizontal support level on the current chart had the following borders: 1.4182 and 1.4202. The price was falling for a long time, and then after the next bull candle formation, the market reversed. This candle managed to overlap the previous one, and for that reason we can plot a level at this point. After that, the price began to correct, a new resistance level was formed, and then the market began to decline again. How often do traders act when the market reaches a support level? Realizing that the price can rebound from this level, traders who open sell positions earlier at higher prices understand that the market can begin to correct, and they begin to fix their profitable positions. Thus, the number of new sellers near the support level decreases, but the number of buyers increases. That can cause the opposite price movement, and the market can start correcting. Let's come back to the example. For a few days, the market actively tested this level. The price pierced it through several times. Traders who expected the price to decline further opened short positions around the level, using pending stop orders. This trending principle is discussed in other hour videos. Pending stop orders triggering can provoke the formation of long shadows below the level. However, there was no effect of the candle closing below the support, but the level has changed a little bit, as it has become wider, whereupon the price tested a new level. The market started rising again, then the price touched the support level again and rebounds from it. The market turns into a sideways trend in which, as you know, it's not worth trading. It's more difficult to forecast the direction of price exit from the flat, rather than just to trade a trend. Therefore, many traders close their positions around this level, and the price, after almost 40 days being at one point, began to reverse. A new resistance level was formed, and its upper border is 1.4508. Having broken through this level, the market moved up and then was rising for several days. We have considered the way of the second property of horizontal levels realization. When the price comes to the support or resistance level, touches it, and then transforms into a flat, that is the market condition when one isn't recommended to trade. The next way of the price reaction to horizontal levels is a short-term correction. Let's analyze why this happens. If the market has a stable trend, supported by the largest market participants, for example banks or investment funds, the price can break through the level and move toward the following targets. In such cases, while achieving resistance or support, a small correction is often observed in the market. It is caused by the liquidation of previously open positions around the horizontal level. Let's take a small example. The market has formed a support level, the lower border of which is at 1.4449 and the upper border is about at 1.4500. Let's paint it out to understand the way the market will react to it in the future. On January the 3rd, there was the effect of the level breakout down. Respectively, in terms of the technical analysis, after the bear candle closing, the sell positions became relevant. I'd like to note that the primary targets often coincide with the nearest support levels. Candles of the 14th, 15th, and 16th December form this level. The level is plotted along the borders and the shadows of the candles, at the point where we can see a clear visual price reversal. The lower border of the level is 1.4090, the upper border is 1.4146. This is the support level and the first target for bearish entering the market. The market is falling, and when the price reaches this level, the aggressive bearish movement is gradually slowing down. After the first touch, the price rebounded from the level. Then the second, third touch occurs. The buyers try to push the price down below the level in the candle of January the 19th. However, that doesn't happen. A correction begins, which lasts for about 2 weeks. This is the example of realization of the second property of horizontal levels. The price begins to correct when support is reached. The market reacts to the levels in this way because, firstly, some traders close the previously opened sell positions, and secondly, other traders open rebound positions at such levels on smaller time frames, or place buy limit pending orders to catch minor movements against the main trend. Such actions affect the change in the balance between buyers and sellers and cause the price movements you see on the chart. The price was in correction for a while, but the trend didn't change, as the resistance levels weren't updated. Each new maximum was lower or equal to the previous one. The trend continued. On February the 2nd, there was a support level breakout, which coincided with the level plotted in accordance with the price movements in December. There is a market reversal from the bottom up and the bull candle closing from the support level. The price overcame it and moved lower. That is not always a market reversal around the levels can take place, or a flat is formed. If the trend is strong enough, it can continue despite reaching the level. In this case, the rebound from the level will be insignificant, and it can be visible only on smaller time frames. The primary targets often coincide with the levels you see on the chart. Therefore, I recommend at least in part to fix the positions around important levels. Otherwise, there is a probability that you will have to outsit a correction, which often begins around the horizontal levels. Let's analyze one more example. It's the euro to dollar currency pair, the daily time frame. After a long-term bull trend, the support level was formed, the lower border of which was 1.0619, the upper border was 1.0681. The market broke through this level on February the 13th. The bear candle is closed below its lower border. As a result, a bear trend emerges after its closing. Since then, the price continues to decline, but after this a correction starts, which lasts for 2 days. During the correction, a new support level is formed, the lower border of which is 1.0522 and the upper border is 1.0576. This level is plotted on the grounds of 2 bear and 2 bull candles. After the completion of the bull correction, the trend remains bearish and a downward movement arises again. The market is declining for 3 days and the price cannot overcome the support minimums. The market cannot settle around the level and the buyers push the price up. As a result, the candle is closed within the borders of the level. After that, the market is fluctuating for 3 days almost on the same point, and the support is updated. The lower border of the new horizontal level is at 1.0494 and the upper one is 1.0533. After the correction has been completed, the price is testing a new support level, but cannot overcome it, and the euro starts rising again. The resistance level has also been updated by this moment. Its upper border was formed after the correction and continuation of the impulse wave completion, and this range is from 1.0628 to 1.0585. This level, as the previously support one, is being tested during 2 days, that is on March the 3rd and the 4th, but the price cannot overcome it. Once again, there is a realization of the second property of horizontal levels. As we can see from the examples considered above, the market often reacts to important levels. It can move away from them, stop, or correct temporarily. Around important levels, some traders fix previously open positions, other traders open positions against the main trend. Anyway, it's important to understand that the market can start to correct near the important price levels. Therefore, around the nearest levels, you can fix the positions, in part, and use the levels as targets when entering the market, or look for market entry points on a small time frame, when the price starts to rebound from the larger level.